Nicely put. And you brought up a good point on like nowadays, like you couldn't do everything by yourself. You do hire people, and that's actually something we'll get into later in the podcast. But some people, in given your area of expertise, a lot of people probably be curious about this. For the average tradesman or tradeswoman, who they have their video editor, plumber, they have some kind of trade, and they offer services. They may be wondering what's the best business structure they should start with. By default they'll be a sole proprietor if they just get out there and start doing it. But is it best to stay like that? Should they start an LLC or some other entity? What's your opinion on that?
In my opinion, the in most circumstances, the best entity is a S corporation. You form a corporation in your state, then you file your S corp election with the IRS. It's taxed as a pass-through entity. The laws are very solid, and all the case law is huge on corporations. So you're fairly fixed, and you have a box that you work in. LLCs are okay; they're not quite as fixed. They also tend to be a little more expensive to form. Lawyers charge more for an LLC. You can get a book, How to Form a Corporation in Your State. They're available online. I think they're about $29.95 now. And it'll give you all the information you need, all the forms you need, everything there. Read the book, fill out the forms, send them in with the fee to the state and your corporation. Then the 2553 is a simple form that you file with the IRS, and boom, you're an S Corp. And that is a very tax advantaged entity, more so than a partnership or a sole proprietor. Now, an LLC can also file as a S corp and be treated as an S corp for federal tax purposes. It may or may not be at the state level, but for federal taxes, it can file an S corp election and be treated that way. So there are a lot of advantages to the corporate structure. There's some disadvantages, but the biggest thing, of course, with the LLC or the corporation is the liability issue. You are no longer personally liable. Your personal assets, your house, your bank accounts, your car are not subject to being seized if you lose a court case because somebody sues you for trip and fall, if nothing else, whatever. They sue you for and they win. And juries are notoriously unpredictable. So you don't want to go to court if you can avoid it. But the liability protection of a corporation is huge, or an LLC. You don't get that in a sole proprietorship or a partnership. You're personally liable for everything. So once you get going, I recommend that from just a tax point of view, plus the liability protection. So, yeah.
Okay. And when you say get going, do you mean like when you've kind of consciously decided that, hey, this is going to be my career? I'm going to take this serious in terms of making money?
Once you have money rolling in, because it does cost a little bit, and it will cost you a little bit every year to be a corporation. You'll have to file a corporate tax return, and there may be corporate taxes in your state. But you can start out as a sole proprietor, test the water. If it's working, great. Now, if you're in something that has a high liability exposure, start as a corporation. Don't put your everything you own at risk uh, if you're in a high liability situation. But any situation can create liability. You could be driving down the street on company business, run over the doctor, whose wife then sues you for his lost income for the next 40 years, and you got nothing left. So, anybody can sue you at any time for anything, and a corporate structure protects your personal assets.
Yeah, there's no price on peace of mind. I think that's probably the best quote that I could say there.
Yep.
And I really like how you said that giving something a try, I guess theoretically for a few months and get money coming in if you decided that, hey, I want to get serious about this and go ahead and move forward with the corporate structure. Except for there's certain businesses where there's more liability than others. If you are going to get involved in one of those, maybe the testing period should be considerably shorter. instead of a few months, maybe a few weeks, but definitely have incorporating in the game plan in the very near future. Like, because some people might do it years down the line, and there could be a consequence to doing that.
There can be. Now, if you're going to go into the asbestos removal business, I'd incorporate before I do any business whatsoever, okay? Because the liability is huge. But, if you're going to be a graphic designer, your liability is relatively low. However, I've seen designers get sued because they've screwed up something and the advertising's wrong, and they sue them for, well, you had me advertised with this graphic and it's wrong, and I spent all this money, it's wasted, so pay me back. And it gets crazy. So there's liability in everything these days. This country is sue happy. There's too many lawyers.
There's too many lawyers. I like that. It's very true. Too many hungry lawyers.
Yeah. And look, I've got a bunch of them as clients because we do a lot of very small businesses and solopreneurs and so on. Because once you're incorporated, you're an employee and you have to pay yourself through the corporation and file taxes and 941s and W-2s and all that stuff. And we've got a large number of clients that are just single people, but we take care of their payroll for them. So, lawyers have their place. So I'm not going to piss off all my clients that are lawyers because there's too many of them. They'll tell you there's too many because it's hard to get business because there's so much competition out there.
Yeah, this isn't dunking on any lawyers. They provide necessary services to a society. And one of Robert Kiyosaki's books, I believe it's Increase Your Financial IQ. He talks about there's 5 different types of there are 5 areas that make up financial IQ. First one is making more money. The second one is protecting your money. A lot of people just don't consider the second one. And what we're talking about is a vital foundational step to protecting your money.
Yes, absolutely. Making it's one thing, having it later is another. We see that all the time in some very high paid professional athletes and actors that then, are making millions or tens of millions of dollars a year. And a few years later, they're flat broke because they don't take care of their money. They don't plan for it. They don't save. They don't invest. They get taken advantage of. They buy into, they start restaurants, which are just a great place to, throw money at and never get it back and other silly things. But it happens. And if you're not careful with it, you may make it, but you'll end up broke if you're not careful. And then lawsuits can, steal millions or everything. So
what's up, everyone? What you just watched was a clip from one of the episodes of the Side Hustler Society podcast. So if you're interested in this clip, I encourage you to check out the full episode linked in the description and also on the end screen right now. Don't forget to subscribe if you're new and hit that bell notification if you want to be notified when the show comes out. And thumbs up on the video greatly helps. Appreciate it, and I'll catch you in the next video.